Hey everybody, Geoff Hyland here with the Hyland Group eXp Realty, here to deliver you your February 2026 market update. Thanks for joining us. Couple exciting things happened this last month. Number one, first and foremost, everybody's wondering, and I get this sentiment all the time. Hey, is the market flat? Are things moving? Well, if you're questioning that, I've got a stat for you. 276 properties went under contract in the month of January. That marks an increase of 23% year over year from January of 2025, and up 56% from the month prior in December. So it felt like as soon as the new year was over, the floodgates opened and buyers started coming out of the woodwork. Again, part of that I think has to do with the interest rates. Interest rates right now, let's address that. They're hovering in that 6.15 to 6.2% range. All the research that I'm doing, all the the smartest minds out there, and here's a question that I get routinely. Hey, there's a new Fed chair pending Senate approval that's going to be coming in. So does that mean that I should sit back and wait for these interest rates to come down? All the research that I've done, and I'd be happy to hear your comments, but all the research that I've done is that they're saying to continue to forecast rates in the 6% range. Whether it's 6% or 6.3 or 6.5, those vary, but you'd have to do some substantial digging to find an opinion that says that the rates are going to dip below 6%. So listen, if you're a buyer and you're sitting there wondering, is now a good time? Let's talk about the overall inventory. 931 homes on the market today. We had 821 a year ago. So inventory is up. You've got more optionality. Now, on a national level, we're still below what I would call the pre-pandemic levels. Okay, so inventory on a national level is still below what we had kind of accepted as the norm prior to the pandemic. But you've got a lot more options now than you have in the last 3 or 4 years, and those interest rates are at near 3-year lows. We got down to 6.1% for, 3 to 5 days or something like that. That marked the low, but we're not far off of that. And if you're a buyer, days on market is a factor. So on a national level, I think the average home is taking about 78 days to sell. Now, keep in mind, there's a key distinction between those homes that sell in 78 days versus the active inventory. So when you break that down to our marketplace in Prescott right now, the average home that went under contract, closed escrow, was on the market for 91 days last month. But the average active inventory has been on the market for 127 days. And those usually boil down to 3 things: location, condition, and price. Okay, so buyers are taking more time in the marketplace and the landscape that we're in right now because they understand that they've got more optionality of homes to look at. They also understand that there's some sellers out there that really want to sell. If you're a particularly rate sensitive buyer, what I would urge you to look at, and I think a lot of sellers out there are receptive to this, is asking for some sort of a concession, closing cost concession. These were very, very prevalent for a lot of years in my career, and we're starting to see it more and more routinely now. You ask a seller for 2 or 3% in concessions, many of them, especially if they've been on the market a while, they haven't done a price reduction, that's gonna go a lot more favorable for you as the buyer long-term, as well as the seller. So take a look at that strategy. The last couple months, we've looked at the values in Prescott and we've seen this sharp spike. And if you've tuned in the last couple of months, I said, hey, this is being artificially drawn up by a larger percentage of luxury properties being sold in Prescott. For the first 5 to 10 years of my career here in Prescott, I used to watch how many homes over $1 million would sell in our marketplace. And for years, it was less than a dozen homes. Well, I'm happy to report, to kind of substantiate my hypothesis over the last couple of months, we just cracked, and when I say we, Prescott just cracked a national top 10 luxury market list, according to Wall Street Journal and Realtor.com. The report shows that Prescott luxury listings have a median list price of around $1.43 million, which just really speaks to how strong the high-end market segment here in Prescott has become. That's pretty cool, being a top 10 list. Other notables, so of the inventory that we have right now, about 418 of them are in Prescott, 217 in Prescott Valley, 55 being in Chino, and the rest being in our ancillary marketplaces. Values, so when you look at those charts, you're gonna see Prescott kind of came back down. So that surge of luxury might have hit the pause button for a little bit, not quite as many. Prescott values dropped 5.3%. last month, bringing it back down to kind of that like closer to that 6-month average. PV actually had an increase, 5% or more. Chino Valley, another decrease of about 4.5%. And overall MLS sentiment was at about 5.35% decline. Again, I think you got to take those numbers with a grain of salt when you consider what happened over the last 2 months with the luxury market in Prescott. General sentiment, what's the outlook? Geoff, what's in your crystal ball? I have no idea. I mean, I say that kind of tongue in cheek, but again, I think the consensus that I'm seeing is that we're going to see stable. I don't think that we're going to have huge swings one way or another. Here's the bottom line. People ask me this all the time. Hey, Geoff, if we were your parents, I had a couple sitting in this office yesterday. If we were your parents, what would you do? Well, that boils down into, overall motivation and what your long-term plan is. If you're a buyer and you want to buy a house and you want to stop paying rent and everything else, I would encourage you to not be sitting on the sidelines waiting and hoping that interest rates are all of a sudden going to come down. Do I think there's going to be more inventory coming on the market on a national level and a local level in the next 4 to 5 months? I do. Do I think that there's going to be an increase in buyer demand as that rolls out? I do. Do I see huge swings one way or another from a value standpoint? Barring some macroeconomic event, I really don't. I really think that we're probably in for some gradual appreciation this year and a little bit more stable environment. Look, the number one complaint from the buyers is that interest rates are still higher than what they want because everybody wants 3.5% or 4%. And overall affordability. We are still below the national average of homes listed for sale pre-pandemic levels. So we're in an undersupply environment on a national level. Until that changes, my question for you would be, where do you think the relief is going to come from in terms of price? Now, sellers, of course, are saying, hey, the market just dropped, I've had to reduce, all that stuff. I get that, but you have to consider if you're a seller, yes, you've made 1, maybe 2, maybe 3 price reductions, but where you started your listing was that actual market value. Is it in the condition that's going to attract these buyers? Because they're taking longer, they're wanting homes in better condition, and the fact of the matter is that the market is on their side in that circumstance. They, for the first time in several years, can sit back and be a little bit more patient. But we're starting to see buyers come out of the woodwork. I think we've got a great year ahead. If you have any specific questions whatsoever, please reach out. And just remember too, all these videos are cataloged on YouTube. So if you ever want to go to our channel, the Hyland Group, eXp Realty, feel free to visit us, join us, and thanks for tuning in. We'll talk to you next month.